Good morning, all. Today we are going to discuss about the topic on cost accounting and the related aspects of cost accounting. So we are going to see about the introduction, objectives, scope of cost accounting, advantages and limitations, and the classifications of various costs. Cost accounting, it is one of branch of accounting and it is very important for the modern management. Cost accounting, it is very important for the accountant for accumulating the overall cost and relate such cost to the specific product or department so that it helps the management to take the effective action. Cost accounting versus financial accounting. The cost accounting and financial accounting helps the management to control the overall organizational policies. But the difference between this both is only one. The financial accounting, it gives the overall picture of the profit, but the cost accounting will give the detailed information about the product by analysis. The purpose of both the accounting is same, but the difference in financial accounting and cost accounting is varies. Next, limitations of financial accounting. The financial accounting does not provide the detailed cost information of different departments, jobs, and services and functions. The financial accounting, it does not set up a proper system of controlling the overall materials and supplies. And the financial accounting, it does not classify the expenses into fixed, variable, direct, and indirect cost. The financial accounting does not possess the adequate system to evaluate the performance of various departments in the organization. And the financial accounting is not reliable to predict for the particular future. It doesn't help the management to take the particular managerial decision making more effectively. Financial accounting, it also does not provide the information and decision like expanding their business or starting up in the new product or improvement in any kind of new product. The financial accounting, it does not provide the cost data, doesn't shows the entire information, whatever cost that has been is determined and rendered to the consumers. So these are some kind of limitations of financial accounting. Next, we can see about the cost, costing, cost accounting, and cost accountancy. Cost, it is one kind of sacrificed resources that we want to obtain something. And costing, it is a process to determine the cost. Cost accounting, it is a technique that helps the management to establish and to determine the various budgets and standards. Cost accountancy, it is the practice of costing and the cost accounting. Cost accountancy. So the Institute of Cost and Management Accountant London has defined the cost accounting as so the many accounting principles and applications of costing and methods and techniques that has been applied to know the entire cost. Through that, we can entirely control the cost and we can ascertain the profitability and prepare the entire information for the management so that it helps the management to take the particular proper decision. Scope of cost accounting. So here it is of 5 steps. One is cost ascertainment, cost accounting, cost records, cost control, and cost audit. First one, cost ascertainment. Cost ascertainment, it deals with the overall collection and analysis of expenses. The expenses which are incurred in their overall production for the different products at different stages of manufacture. The expenses are linked up with the production and the expenses will be analyzed what a kind of expenses that has been made for their entire production. Second one, cost accounting. As I told you earlier, it is one kind of process where it records all those expenditure. By recording all those expenditure, they can prepare the statistical data and they can know whatever cost that has been incurred for entire production, for entirely manufacturing the products. And if they want to make a control, they can also control those expenses. Third one, cost and budgetary control. This is very important for the company. By ascertaining the entire cost, they can control their cost by the future oriented. Fourth one, cost audit. It is a verification of all the accounts whether it has been correctly maintained or not. Next topic, objectives of cost accounting. So here, first one, it is of to determine the cost, to analyze the cost, to reduce the wastage, provide cost data, ascertain the profitability, and control the cost. We can see one by one. to determine the cost. So the cost accounting, the primary objective is to determine the entire cost so that they can come to know what is the cost incurred for per unit, the price per unit will be calculated and the product can be sold in the market. Second one, to analyze the cost. The cost is calculated only after analyzing, which is done by the worksheet to know by determining the different elements like material, labor and other expenses. Third one, to reduce wastage. So here the wastage is about material cost, labor cost and the overhead cost. If there is any wastage, so by the help of cost accounting, we can reduce all these costs. Fourth one, provide cost data. So here, with the help of cost accounting, we can take out the entire records, whatever cost that has been accumulated in each stages of the production. So it will be maintained by the accounting department. By seeing this, the management can take a appropriate decision. Fifth one, ascertain the profitability. So with the help of cost accounting, they can know about the cost and this will help the management to increase their profit. Sixth one, control the cost. This is the main objective of the company, to control the entire cost. Next, advantages of cost accounting. So first one, elimination of wastages, losses and inefficiency. Second one, cost reduction. Third one, identify the reasons for profit or loss. Fourth one, advice for make or buy decisions. Fifth one, price fixation. First one, elimination of wastage and loss. So a good accounting system, cost accounting system, will always eliminate all kind of wastages and losses by maintaining the entire cost. Second one, cost reduction. So if they want to make any kind of new things, new production or new improved methods of production, this can be done only with the help of cost accounting. So it will automatically leads to the cost reduction. Third one, identify the reasons for profit and loss. So here they can also find out if their profit got increased or decreased. So how to maintain their profit, and based upon that the management take an immediate action to maintain their profitability in their future. Advice on make or buy decision. So the management, with the help of cost accounting, they can know when to buy or when to make a product in the open market. Cost control and price fixation. So controlling the entire cost is very important for the company. So here they can prepare the budget and they can mainly focus on they can prepare the budget and the actual performance is compared with the standard to find the variations. So period to period cost comparison can be done to have the entire cost control. Limitations of cost accounting. So first one is lack of informity. So here the accountant of the various companies who's having the different production process, different products manufacture, they won't have the uniform procedure of cost accounting. It may differs. Second one, conceptual diversity. So here, the large number of conventions and flexible factors such as classifying the cost and issuing the materials on average or standard price, arbitrary allocation of joint cost. So the reliable of cost accounting may be little lower. Costly. So it cannot be adopted by the small or medium scale industries because it involves the cost higher. So this type of cost account will be adopted only by the big concerned companies. Lack of double entry system. So double entry system is not adopted in the cost accounting. So we cannot have a check in the entire transaction. Sometimes the errors may occur. So these are some kind of limitations of cost accounting. Next one, cost classification. The costs are classified into different bases like nature, cost center, functions, behavior, decision making, production process, and time. First one, the cost classification by nature. So it is of three classification. One is material, labor, and other expenses. The material is the cost which are related to raw material and other related costs like taxes, insurance, freight charges. Labor cost is about the salary and the wages which are paid to the employees. It includes like PF, commission, bonus, incentives. Other expenses like promotion, job processing charges. Second one, cost classification by relation to cost center. So it is of direct cost and indirect cost. So direct cost, the cost which are directly associated in the production process. It is subdivided into direct material cost, direct labor cost, and other direct expenses. Indirect cost is also the cost which are cannot be directly, that means indirectly met for the production process. It is a secondary cost which is also classified into three types: indirect material cost, indirect labor cost, and indirect expenses. Third one, cost classification by functions. So here, production. So all costs which are related directly or indirectly related to the production will be mentioned over here. Administration. So all the costs which are involved in the management activities of an organization like stationery, printing, telephone charges, these the cost and all will be allocated over here. So this is known as an administration overhead. Selling. So the indirect costs which are incurred on the various sales like advertisement, promotion, research, customer service. Distribution. So here this cost refers to the costs which are incurred for making the goods and services which are available to the customers. Examples are warehousing, delivery service, and transportation. Research and development. Research cost is very important cost for the company so that they can modify or they can create a new product or an existing one. So these costs incur some kind of expenses like research, implementation, findings. Next class classification by behavior. So here it is of fixed cost, variable cost, and semi-variable cost. Fixed cost where the cost will be constant, it won't be keeps on changing. This is known as in fixed cost. So it includes of rent, depreciation, salary. Variable cost where this type of cost will changes proportionately. Examples are raw material, packaging, sales commission, and wages. Semi-variable cost where this cost is moderately influenced by whenever there is a changes in the business. This is what we call it as in semi-variable cost. This may include of maintenance cost, management cost, supervision. Next, cost classification by decision making. So here by taking down certain costs, it helps the management to take a proper decision making. So we'll see one by one. First one, marginal cost. Marginal cost where it is the cost of producing an additional unit so that we can have an impact, we can know about the impact for the total cost of production. Differential cost, whenever there is an increment or decrement in the total cost of bulk production, so the changes in the cost of one single unit will determine the differential cost. Opportunity cost, the value of one or more products given upon to acquire the desired product or service is known as an opportunity cost. For example, while choosing a green tea, a person can go for having a cup of coffee. So this is an opportunity cost. Replacement cost. So when a machinery or any kind of asset having a high maintenance cost, so here the company can replace this asset with another better asset in the market. So this is what we'll call it as in replacement cost. Sunk cost, the cost which has been borne by the organization in the past and it cannot be recovered at the any stage of the business. This is what called as in sunk cost. For example, the freight inwards will be paid at the time when they are purchasing the machinery, and it has been written off when the time when they are selling that particular machinery. Second, next one, normal cost. The routine costs which are associated with the manufacturing of goods and services under usual circumstances, that is of salary. So this is what we'll call it as a normal cost. Abnormal cost. The cost that arises suddenly or unknowingly is known as an abnormal cost. For example, if there is any theft, robbery, or fire accident. Avoidable cost. So these costs are under the control of the management. It can be prevented as per the organization need. So this is what we call it as an avoidable cost. Unavoidable cost. So these costs cannot be predetermined earlier. This is called as an unavoidable cost. Next classification by production process. So here, first one, batch cost. So the cost will be incurred while producing a whole lot of comprising of identical products in a particular batch. Process cost. The costs which are incurred on performing different kind of operation is termed as process cost. Operation cost, the cost incurred in a particular business function is known as an operation cost. Operating cost, it records the day-to-day expenses of the organization. Contract cost, whenever the company is entering into any kind of contract by agreeing the certain terms and conditions, this is called as in contract cost. Joint cost is whenever the company is manufacturing one or more useful products or similar products, it is known as in combined cost or joint cost. Last one, cost classification by time. So here it is of historical cost, that is the cost which has been ascertained and evaluated after if it has been incurred is known as an historical cost. Predetermined cost, the cost which that can be identified and calculated before making the production of goods and services. Standard cost, these type of actual cost is predetermined as per the certain norms and regulations guidelines which has been implemented in the company is known as in standard cost. Last one, estimated cost. So this cost of the entire business operation is predetermined based upon the experience. So it's fully based on the assumptions. This is known as an estimated cost. So these are the different kinds of aspects which are related to the cost accounting. Thank you.